Okay, this video is going to be about using the smart money concepts to identify a valid pullback. This is like the first of several techniques to be learned that will help you build up to and understand how to use the SMC or the smart money concepts analysis techniques. Um, So as kind of an overview, what you see on your screen here is the SPY Daily. And on here, I've marked off several things. I've marked what we call major highs and major lows, noted by the blue dots as a major high and the orange dots as a major low. You'll also see things on here like BOS and IDM. Those couple of things are just a little bit beyond the scope of this first video. These are the first steps here really to start to understand how to identify structure, and then as we build, you'll be able to understand more of this and actually get your way to developing high probability setups and trades. Okay, so I'm going to just draw a path on here. I use the term major highs and major lows, and what I'm going to do is I'm just going to connect those dots to demonstrate what that means. Okay, so now what makes those major highs and major lows? We'll get into that in future analysis, but the key here is to understand that there is a process to identifying these major highs and major lows, and you see as I do that, you have a nice smooth line from point to point, but there is all of this structure in between. So the line that you see here is called the major high and low connection, and the zigzagging in amongst that is the internal structure. So our goal here is to learn to identify what these pullbacks are all about. If it's a valid pullback, do we identify it as major or minor? And all of those subtleties, one, are very easy to do, but two, once you learn how to do it, you'll start seeing these structures pretty easily, and you'll be able to use them to your advantage. So hindsight is 2020. So drawing this line on here now is pretty easy, and it makes visualizing this very easy at this point. But of course, we're going to live and die on the hard right edge of the chart because that's where you're actually going to be doing the trades. So that's where these set of rules and techniques were going to come in to help identify all these different pieces of the puzzle and help you assemble it. So the first step I think we're going to do is we're going to switch to a different chart. Here's still the spiders, but it's a two-pane chart right now, and on the left is a 15-minute chart, and on the right is the 1-minute chart. Typically with the smart money concepts, you're always using a higher time frame and a lower time frame. Higher time frame to identify major trend or major turning points, and lower time frame to define high probability entry points, etc. And target prices actually would be on the major higher time frame. So first thing I'm going to do is I'm just going to identify a couple of major points to take this crazy zigzag out of here and see what it looks like. So I'm going to draw a path. I'm going to just draw from the low to the high, all the way to the low over here. And we're going to go, that was an accident. Okay, I had to get that corrected. I got it corrected now. What I've done here is on the 15-minute chart, I've really just drawn from this low to the high, down to the next low. It's two relatively clean legs up and down, but how would you have traded this? That's our goal. How do we get there and talk about it? If you can take a look at that major line and you look over here at the 1-minute chart, you'll notice it's the same line, but now you see the 1-minute action and it kind of jogs all over the place. How do you make sense of that? Well, we've got a series of steps. I'm going to take this one step farther on the 15-minute chart, and I'm going to make it just a little more refined. low to, let's say, what we call a minor high, and you can see that there is literally very few peaks and valleys in that particular line, but you look over at the 1 minute chart and it is slightly more refined, slightly better follows that path, but even that, in amongst this are quite a few minor pullbacks going left, right, up, down. It's our job to pick these apart and decide what is a high entry or a high probability entry or exit for our trades. Okay, the next step, we need to learn a little bit more detail, and I'm going to do that by using this Word file right here. And so to identify valid pullbacks, we have to understand a little bit more about the price action. So these are just representing candles on the chart, highs, lows. Notice they're all the same color because it doesn't matter if any of these candles are up or down, different colors. You identify valid pullbacks based on the highs and lows and closes, nothing more. So we're going to go through a few samples to show you what differentiates valid from invalid. So right here on the top left, this is scenario 1. In the end, this is a valid pullback. That's what this check mark means. So you notice I have candles 1, 2, and 3 labeled. Well, in order to have a pullback, first I've also identified this as a bullish market, which means generally we are trending up. As we all know, trending up does not mean every day is up, and that's where identifying pullbacks comes in. So here we come up, this second candle closes above this candle. So now once you have a close above that candle, in order to decide if you have a valid pullback, you have to have another candle or candles. It doesn't have to be one, it could be 10. But the point is, after the number 2 candle closes above the number 1 candle, there's some price action to bring you down to close below the number 2 candle. And in this case, number 3 definitely closes below number 2. So this is what determines a valid pullback. Again, just a quick review. We've come up, one candle has closed above the previous candle, and then the third candle has now closed below, and it doesn't have to be a close. It can be a close or a wick below. The step 1 to 2, it's important that 2 closes above candle 1, but for candle 3 or identifying the pullback, it doesn't matter if it's a close or a wick. So for example, what I mean by that is right here we have a definite close below the number 2 candle wick. If this were a candle like that, that would still identify that as a valid pullback. I'm going to just reset that. So now if you take a look at this chart, 1, 2, 3 identified over here, this is what the zigzag would look like on that chart. We've identified a valid pullback. On the right hand side of the chart, you see I've drawn the bearish scenario, and this is literally just the inverse of the bullish sample. 1, 2 closes below, 3 either wicks or closes above, and that becomes your valid pullback. Okay, going on to the next. Scenario 2. Scenario 2, here we end up with 2 valid pullbacks in the setup. So again, we're in a bullish market. We come up, 2 closes above 1, 3 closes above 2. Okay, so now 3 closes above 2, but it also at the same time closes below 2. So now we've definitely had a close above, and we've had a wick below. I apologize if I said close below, but it is wicked below. So that is indeed also a valid pullback, going up to a high on 3, down to a low on 3 as well. Then you would continue up with a close of 4 above 3, and then in this case, number 5 wicks below the wick of 4. So now that would be a high and a low. And if you look at the zigzag here, this is how that would look on the chart. And inverse over here on the right for a bearish market. I'm going to go to scenario 3. So scenario 3 uses a concept called equal highs and equal lows. This actually happens fairly often, and it is just as good, and it's a powerful signal, whether you get wicks closing and opening at the same level, or you get bodies opening and closing at the same level. Equal highs, equal lows are an important piece of this analysis. So in this case, we've candle 1 is closed above the previous candle. Candle 1 and candle 2 have equal high on the wicks. Candle 3 has wick below the candle 2, so therefore this becomes a valid pullback because effectively these are considered one and the same as they have an equal high. So that is a valid pullback, and this is what the zigzag would look like on the chart. Inverse that into a bearish. Instead, we talk about equal lows instead of equal highs. So now we have a wick above 2, and that is a valid pullback in a bearish market. Here's your zigzag. So that's really what it's all about. It's always all about candle number 2 closing above candle number 1, and then candle number 3 either closing or wicking below candle number 2. And again, that's the sample, but it could be multiple candles. It doesn't matter if it's 2, we could have 3, 4, 5, 6, 7, and then 1. Finally, we'll close below that 2. That would also be a valid pullback. Now here's a couple of invalid setups. For example, 2 has definitely closed above 1, but then 3, 4, and 5 have not either wicked or closed below this 2, right? Notice they have been all within the scope of that first candle that defined where this process starts. So since 2 defines where this process starts, we've never gone below it. Therefore, this is not a valid pullback. Therefore, if you were to draw the zigzag on the chart, it would literally be a straight line from lower left to upper right. No question. Here's the inverse of that. We simply have never gotten below 2. Therefore, this is not a valid pullback, and you continue down on the right. Straight line. Effectively, a single leg. This is just noise. So now, the last scenario, also an invalid pullback. You see 2 is closed above 1. Again, we've never gone below 2 in either case, even though this candle here has come below 3. Again, this first candle is what has defined this process in this zone. So until you properly break that high, it doesn't matter what happens, until you properly break the low of this candle with some following candle, this process isn't over. And in this case, it never happened. It continued up. Therefore, we have a single leg connection from the lower left to the upper right. Just some noise in the middle. Inverse of that is right here on the right. Okay, the last step, we're going to go and we're going to actually do this on a chart. And here is that same 15-minute on the left, 1 minute on the right. What I'm simply going to do is I'm going to delete this one, and I'm going to simply move this one off to the side so we can talk about this. And I'm going to blow up the 1 minute chart. And we're going to zoom in on this part right here. Now this was the low that we used, and whoops, what's going on here? I don't know what that was, but it's back now. So we've definitely come up. I'm going to zoom in just a little more. Now the question is, what happens here? We have not gotten above the high of that, right? Therefore, it is not candle number 2, as it were, yet. We continue down, continue down. We never got above that point, so we have not found a pullback yet, right? Now this one here actually does. Oops, I apologize. We're starting from this one down here. So this one definitely goes up. Now we have to get below this one to have a valid pullback. And what that means is that doesn't happen until here. So you continue all the way over here. This one finally closes below there. So this becomes your valid pullback. So I'm going to draw that a little bit. We're going to go up to here, to there. Now we know that's our bottom because we have come below that and we have continued upward from there. So therefore, there's your low. Now we continue up, continue up. This one, here's your high, but now we got to find something that closes below this one if this is the high. Well, as we go sideways, go sideways, go sideways, we are not finding anything that does that. And for the whole width of this candle, you got to continue all the way across here until you break above it. Now we broke above it, and we broke above it again. So here is what could be a high. We finally go below with the wick right there, so that's a high. We've closed below it. Now we're going down, and we go down to there, and we continue up from here. So this one, about this low, closes up above it, so that's definitely a low. And you're going upward now here. Notice we have equal highs here. This one closed below that, so that becomes the high. Continue down, there's the low. Continue up, here we have another set of equal highs and a close below. And again, it doesn't have to be a close, it can be a wick or a close when you're talking about going below or above for that matter. The initial one has to be a close, but again, equal highs is a different case. Continue down, here's our low, and ultimately going above. Continue up, here is our high, and we know that, and we finally go down and we wick below right here, so that's definitely a defined high. Continuing all the way down, and I think what this is a low point that goes definitely above there, so that's a valid pullback, and we continue. That never changes. We continue to go up, and I have to move the chart and start a new line, so we're going to do that. Let's start a new line right at our low. As we go up, nothing is pulling back below all of this way. So this would be a very nice trending move. Finally, we get a close above the candle before, and finally we get a close and a wick below here. Therefore, this is definitely defined as the high or a valid pullback. Come back down here. Here is a low. This next candle goes above it, and therefore this is definitely valid. Come up, and we get up to here, and I see nothing. Those are, oh, no, that is actually higher, so that's higher, and that pulls back, therefore that's a high. We come down, that is the low, and we continue upward. We hit that peak, and this one definitely below, so we go down to there. Here we have, this one is just a little higher than that, so could be considered equal highs or not. It's within a tick or so. I'm always going to split hairs on that one. Come down, here is the lowest low, and again we continue up. There's some of the high, close below, therefore that's the pullback down to here, and I'm going to start going a little quicker. You can take your time and analyze this in the future. I just want to get into a little bearish side action. We come to there, and I need to move the chart over again. So now here we're going to get into a little bearish side action, and again all on the 1 minute chart. Start at that low, we're going up, here is the high, so we know we've closed above that candle. Where do we get below it? We don't actually get below it till right here, and both a close and a wick below it, but that is definitely defined that as the high. We continue down till we find a low, and we find that low here because this candle here has gone up above it. So that is a pullback. Come back down here. That's a low. And this didn't count. It never got below there. We go all the way up to that high. And again, we waterfall all the way down until we get to this very low. This one continues up above it. We're going to go to all the way through That one right there pulls back below, so that is a high. That's another low. That's a high. There's your low. Another high. And I believe we go here. There. And this process will continue. And I'm just going to see if we made it all the way down to the bottom. Let's see here. I'm just going to follow it all the way down to this bottom piece. That way it'll look complete. Down here, there's your low. This does not close above that. We continue down. This one actually goes. This one finally here closes above that. And yet we have one more, so therefore that's your high. Now we're going to cascade down. We finally get down here for a lower close, higher high. We get that valid close below, back to the top, down to there, and we're going to continue down to the very bottom so it matches the 15-minute. That one definitely qualifies. Get down to there, there, and now we follow this down to here. And we're almost there. And take that from there to there, and we'll just end it here. It goes perpetually on there, but now let's zoom back out and take a look at how zigzaggy that is, right? But you notice even that does not take into account every corner, and that's going to be important in identifying what price action do you want to pay attention to and where are the high probability turning points. So if I go back to the dual screen, you can see what that short 1 minute chart looks like on the top of the 15. I'm going to take this back. I'm going to put it right on top of there and zoom out so you can see the difference. So in closing, that's a very important first step because everything we're going to do in the future, all the different techniques, all revolve around identifying these pullbacks. And once you understand how those pullbacks are built, we can then move on to defining what is a breakup structure. And from there on, we can define an order block. And the order block is what will allow you to identify a high probability trade. So we're not too far away. Each concept is actually fairly simple, but it does require practice because even in that short little exercise we did going up and down here, you see how we had to actually just take a couple double takes, make sure we actually knew which one was the high, which one was the low before we identified it. Once you do, it will become easy. Do some practice, leave some comments below, and we'll talk to you later. Have a great day.